Well, markets are mixed close to midday. The Dow is lower while the Nasdaq and S&P are higher. We've had strong results from Morgan Stanley and Goldman Sachs this morning, which helped to reverse losses early in the session after disappointments from Google and IBM yesterday. Now we're joined by Joe Greco. Joe, how would you explain the swing that we saw in markets this morning? Was it simply investors reweighting their reaction to different earnings results?
I think you hit the nail on the head. The key drivers there, of course, Morgan and Goldman to the upside, providing a little bit more optimism, especially after, the cautionary tale from Bank of America and JP Morgan, prior, and Wells Fargo. And then, of course, last night, the initial driver, actually in reverse order, last night's earnings out from Google and IBM were the key drivers lower for tech, and those spaces both have recovered and shed a bit of those losses and started to rebound a little bit as well. It is a little bit of a precarious time of day because we traditionally do see when Europe closes a little bit of a lift to the U.S. market, and of course we do have tomorrow as a close day for the markets here in the U.S.
Now, if we do extend the three-day winning streak we've had so far this week, could it be the beginning of an upward move for markets after the volatility that we've had earlier this year?
The key word there is indeed volatility, and I think that is what most traders are focused on right now. Clearly, going into our earnings, stock by stock, having some sort of exposure to the option space, derivative play, is where people are looking now. The stocks have become very volatile, so hedging yourself, makes a lot of sense. And then, of course, the resulting volatility that pervades afterward in the equity market is where you see these gyrations. So I do tend to think if we can close out today and therefore the week on a positive note, that sets a little bit of a tone. But again, anything is game when you have a slew of earnings next week. You still have the geopolitical risk over with Putin and the UK and Russia in the Ukraine, and of course, you never know what's going to come out of the Fed. And there's quite a few conferences planned for next week.
Now, broadly speaking, how significant do you expect this earnings season to be in terms of being a driver for markets now that the Fed is pulling back?
It's a great question. Right now, I don't think it's going to be so much of a knee-jerk if you look at it over the course of time, over the next, say, 3-4 quarters, but it'll definitely be a turning point. Now's a great inflection point. We had, obviously, going into the end of the year, taper talk and then the start of the taper. We have the new, Fed chairwoman in Janet Yellen. We have a new issue on the front, as we just talked about, over in Russia, the Ukraine. So those issues, combined with this earnings season, really point towards a very precarious spot for the economic recovery. If 2 quarters from now we can look back and say that was the point where we really gained our footing, and all of the bad was finally fleshed out, all of the good gained further foundation, then the market should be somewhere near maybe 1900 in the S&P. If 2 months from now or 2 quarters from now we're looking quite a bit lower, then I think this will be the point where you say things started to really break and the ship went lower in the sea.
Okay, thank you, Joe. And that's Joe Greco from Meridian Equity Partners. And I'm Jane Searle for The Street.